Twitter and Square CEO Jack Dorsey tweeted on October 22nd of 2021, hyperinflation is going to change everything. It's happening. Later, in response to a follower's follow-up question, Jack added that hyperinflation will happen in the US soon, and so the world. Now, you'll agree that such an unsettling proclamation is enough to get anyone wondering, what is hyperinflation? Could it really happen in the US soon or at all? Thankfully, that's what I'm here for, and in this video, I'll tell you all about hyperinflation, from what it is, how it affects you, and how you can protect yourself from it. Let's get right into it. So first, what is hyperinflation? Hyperinflation is a term that economists use to describe a period of extremely high inflation, such that prices of goods and services rise more than 50% per month. Although it is a rare event for developed economies, it's occurred many times throughout history in China, Germany, Russia, Hungary, and Argentina. And if the current state of our economy is anything to go by, hyperinflation might just be imminent for us here in the US. But whoa, just hold up there before you accuse me of proclaiming doom. Hear me out. My reason for saying that has to do with the two main causes of hyperinflation. The first cause of hyperinflation is an increase in money supply, and this has already happened in the US as we speak. According to research, an incredible 80% of all US dollars in existence were printed in the last 22 months alone. And note this, that is only up to October 2021. The dollar printing exercise meant that we went from 4 trillion in January 2020 to 20 trillion in October 2021. Now, here's the thing, when the government begins printing money to pay for its spending like so, the money supply increases and prices of commodities rise as in regular inflation. I'm sure you have realized that things have become quite expensive. Think of everyday items like gas, bills, clothes, food, new cars, heck, even used cars. I've had a few friends of mine sell their cars for the same price or more than they bought them for. Even look at the price of real estate and lumber. I actually flipped a house recently and the price of lumber tripled from when I started building it. It's crazy. I believe that exonerates me from my earlier doomy proclamation at least halfway. So let me move on to the second cause of hyperinflation and how it ties in with what's happening in our country. Another thing that causes hyperinflation is demand pool inflation, which occurs when a surge in demand outstrips supply, sending prices higher. This can happen due to increased consumer spending because of a growing economy, or a sudden rise in exports, or more government spending. Now, if you combine the massive amount of newly printed cash with such supply chain issues, we definitely have the two ingredients for hyperinflation, don't we now? Let's now look at how hyperinflation will affect you. When hyperinflation is in effect, you will lose your savings since cash loses its value. $100 today doesn't get you what it used to back in the day. Besides, you might lose your job because many companies are bound to fold at this time. Or maybe you'll be part of the Great Resignation and quit your job. I'll link a detailed video below on that for you as well. Not to forget, hyperinflation can cause a surge in prices for essential goods such as food and fuel, as these become scarce, making you strain some more to afford and maintain the same lifestyle you currently have. Are you pretty freaked out about inflation eating away at your money? Well, there are actually a couple of ways to protect yourself, and by protecting you, I mean your finances from inflation. Number one, convert most of your cash into assets. You may think that keeping cash in a savings account is the safest way to preserve your wealth. After all, $1,000 today will still be $1,000 in a month or a year from now, right? Well, it's more complicated than that. You see, if you keep that $1,000 a year and in that period inflation went up by say 6%, your purchasing power will have been reduced to $940. But if you have no cash, it can't be devalued by inflation. So instead of growing your savings account balance, how about you keep it at a minimum and instead direct the funds to stock market investments. You can go for index funds, which are a lot safer than standalone stocks and bonds. The S&P 500, for instance, has had an average annual return since its early adoption in 1926. In fact, in 2021, the return rate was an incredible 28.71%. As you can see, this rate actually beats the hyperinflation rate we're currently experiencing. So your money actually multiplies when it's tied up in the stock market. Over the last 2 years, the people who have had money invested have become richer and richer. And if you didn't have money invested, you didn't get to reap those same benefits. In this time, I've personally taken my net worth from $200 to over $100,000 through investing in stocks and real estate. Another thing that is one of the best investments you can make is subscribing to the channel, because it is scientifically proven that when you subscribe, your net worth goes up. Look at the chart, you can't argue with the facts. Number 2, diversify your portfolio if you have some investments that are doing well. You're already on the right track. However, to further protect your investment from the surging inflation, you want to diversify your portfolio as much as possible. Diversification is one of the best strategies for protecting yourself against market fluctuations. So if one asset makes a loss, another makes a profit, and balances it all out. While it's almost impossible to find a fully inflation-proof asset, you want to add relatively inflation-safe assets to your investment portfolio. Of course, you will need to do a bit of research to find assets that have historically performed well in periods of inflation. Currently, I'm working on buying some rental properties so I can have my money invested in real estate, which historically has gone up in value over the long term. As long as I hold long enough, they should go up in value. There's also the tax benefits and cash flow as a bonus on top of that. I'm doing this along with investing in stocks and also some crypto, and I'll have a video linked down below to M1 Finance, which is the platform I use to invest if you want to do the same thing. I also have a video I'll link on how to start investing in stocks. Number 3 is defer big purchases if not immediately necessary. One of the hallmarks of hyperinflation is major price hikes. Sellers increase their prices to shelter themselves from the depreciating value of the dollar. However, given that inflation is not the only price determinant, not all consumer goods can maintain these high prices for long. A good example is vehicles. Despite inflation, you'll find that car prices tend to dip as the year nears the end and well into the first month or two of the new year. And that's because during this time, dealerships are usually looking to offload older models and usher in the new shiny models for the new year. That means you may actually benefit from holding out on major purchases until prices go down a little bit. This is just something to think about in regards to inflation, but even just for growing your wealth in general, delaying gratification on purchases and learning how to budget your money will make a huge difference in your net worth over time and as you continually practice this. So, what can we conclude from all this? Hyperinflation is definitely something to worry about. However, you can turn it around and actually make money while the dollar loses value. Now, if you have more strategies that you're using to protect yourself from inflation, comment below so that we can all help each other out and so we can keep the conversation going. If you learned something useful from this video, be sure to like it, share it, and don't forget to subscribe to the channel because it really makes a huge difference. Thank you so much for watching. I'll see you next time.